Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you gotta get spotted. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Test. Okay, there we go. Fix that part. Oh, we can't get the music starting. No, that's wrong. There we go. And man, this is the worst start to the stream ever. There we are. I'm sorry, guys. Yeah, I recorded a video yesterday and I did not connect a couple of things back up correctly. I forgot to plug the camera into the computer and I forgot to plug the other mic back in, so it's all good though. Okay, guys, let's look at the market. I know I'm late here. Drove one of the kids to school. But we do have some interesting movements still here in the treasuries. So we had a pretty wild up move yesterday. I mean, man, that really did go overnight and then extended in the regular session. Now, when I was reading, man, I read a lot of stuff in my news squawk and everything about what the treasury market was doing overnight. But, you know, it wasn't that big of a move. It came back and they seem to be retracing that with the jobs numbers, which, by the way, what was that? U.S. initial jobless claims, slightly higher than expected, 219 versus 213. I'm still expecting that at some point we're going to see a spike in initial jobless claims, but I think that it's going to be another week or two. Okay. S&P 500. We are up. We're doing okay. Oil's still down. Gold and silver, man. Gold has just had a wild month, hasn't it? Copper's up there. Wow, actually copper breaking out into some new highs. Interesting. And the yen. So some hawkish commentary from the yen last night, but you know, this larger trend has kind of been a bigger thing. And you are seeing the dollar decline here. And then you got Bitcoin trying so hard to make it above 100,000. MicroStrategy rebranding yesterday to just strategy. Okay. But they're not able to get above 100,000. You took a long at 200 and got out at 240. No, you did not. You're lying. You're lying. There's only 3 contracts at 240. How would you possibly get out at 240? You're not at the front of that queue, I guarantee that. Tron Sim trying a new stat. Oh, okay, you cheated the sim. Okay, you know what? It's not your fault though. I'll cut your break. It's not your fault. Let's just say, for the sake of argument, that in live you probably would have gotten 23, right? Sure. I'm okay with that. Well, I'm getting, sometimes I get this thing where like the charts don't do the tick replay correctly. Yeah, if you market it out at the high, you'd be hitting 23 half. So the sim gave you an unrealistic price. Was it like the data provider sim? That sounds like exactly the sort of things that the data provider sims do that I hate. Well, not that I hate, but it's just kind of like, yeah. Yeah, rhythmic. No, it's like this thing where it's like, if you've had it sitting there for long enough, it basically just assumes that you're at the front of the queue or something. It's just, I don't know. It'll give you fills at prices that aren't realistic. Both the rhythmic and the CQG sim, they seem to work the same. Okay, let us read about the initial jobless claims. Initial jobless claims rose very marginally off of near multi-decade lows last week from 208K to 219K and slightly higher than the 213 expected. The state-by-state data is just remarkable in its flip-floppiness. Yes, that is a word. Last week, California saw jobless claims plunge. This week, California and New York saw claims soar. Oh, what? That is really weird. That right there? What are they doing? Okay, well, continuing claims continue to oscillate around 1.9 million Americans, decoupling from initial claims' stronger trend. I should just keep this over here. Do you see that? So I suppose, so one might say, is there something going on with the data that's fishy? But I do think that the other things that we are seeing are in line. Like basically, we're not necessarily seeing a huge uptick in people getting laid off or anything like that. But the people that don't have jobs are having a very difficult time finding them. So if that's really all the case, then I think what you will see happen is eventually it will filter through if you keep interest rates high, rather. If you don't lower interest rates, what eventually will happen is that companies will start laying people off, and you will see the initial jobless claims come back up to here. That's what I think is going to happen, honestly. It's either going to be that, or the economy is going to chill out and this line comes back down to here. Right? I think that this gap is going to close at some point. I'm not saying that this gap is like a statistical aberration, but rather I think it could be like an early warning. Right? Okay. Finally, we can't help but notice this jobless claims data series seems decoupled from various other labor market realities, such as the Conference Board's jobs plentiful, hard to get series. So, strong ADP, strong jobless claims, weak JOLTS, weak Conference Board, tomorrow's non-farms payroll is anyone's guess still. Lower rates equals higher inflation. Not. I mean, that is way too simplistic of a approach to it. I am genuinely concerned that because we had so much inflation recently, that we are likely to overcorrect the other direction and be too hawkish when the economy starts to falter. No, that's not. There's a direct correlation to it. It's one of the few absolutes. No, it's not. Because we just had a period of 10 years where the interest rates were rock bottom, and inflation, we were actually dealing with deflation. We were under target. So that is a heuristic that does not really work, especially not in the modern world in our current situation. Because if AI is really as I'm not wrong, what a fucking dude, you don't know what you're talking about. Like, I'm okay with having people tell me that I'm wrong, but I have a problem with people telling me that I'm wrong on something that is like so clearly well established. It's like, okay, so I think that you're using the word correlation incorrectly. Okay. Because correlation is kind of like this data series leads this data series, or, co-integrated, this one is a component of this one, and that sort of a thing, right? Interest rates impact inflation. It is a tool that we use to adjust inflation. But it is not the only component, right? And in the modern world in particular, and when I say the modern world, I mean like, the current day, there are other factors that are particularly troublesome for this whole kind of, like central bank managing the money supply problem, because we are experiencing highly disruptive deflationary technology improvements. So the world becomes more globalized and technology gets better and we become hyper efficient. That is actually deflationary. And what ends up happening essentially, is that in order to keep the economy going in that situation, you have to print massive amounts of money or you get deflation. Right? And it was only when it was a common, there's this really interesting study about this. I probably shouldn't, I won't detour into this, but you can go and look at how these different components affected it and everything else. But we created some inflation. Then you have to raise interest rates to lower the inflation back down. But once you've normalized it, right, there's a really good chance, I believe now, and I did not always believe this, but it really seems to me that you're probably going to go back to interest rates being like practically nothing. Especially if artificial intelligence is really like, what is the word? Like, I'm a little bit skeptical of the impact that artificial intelligence is actually going to have, right? I'm having all these people telling me that it's like a super big deal and that like all developers are going to be replaced and these sorts of things. And it hasn't happened yet. And I don't see it happening. I think that there are some fundamental issues with some of these LLMs. There is this new thing that OpenAI is releasing this week where that's like deep research, but I don't think that deep research fixes the coding problems. But it could lead to hyper efficiency. That's going to be insanely deflationary. Of course, there are other factors, but those other factors can't be manipulated like turning on and off a light. Well, that's true. But you're treating it like, well, we shouldn't lower interest rates because that will increase inflation. And that is not exactly how it works, right? You have what's really going on is you have a certain amount of value that is created in the economy, and you have a certain amount of money that is created in the economy, and you have to adjust that amount of money to match that amount of value. So if you create too much money relative to the amount of value that's created in the economy, then you get inflation. But if you have an economy that is creating insane amounts of value, like it has the past 10 years before COVID, then you have to print insane amounts of money to keep up. And the interest rate is just one of many factors that we have that allow us to adjust the amount of money that is out in the economy. And how does that work? Well, the higher that the interest rate is, the less people will be able to afford to borrow money. Because money is created by banks when they make loans. So essentially, less people are going to be able to make loans, and so less money is created. And that's why interest rates affect the money supply. Right? So right now, you have a situation where because the interest rates have been so low historically, and because there's a really good chance that interest rates could be low in the future, it really doesn't make sense to borrow money. And so you run a very, very real chance of the money creation really lagging and getting to a point where it could create a recession. Like just straight up. I think this whole thing, like the Federal Reserve, well, we're concerned about inflation coming through right now because of policy uncertainty coming from the Trump administration. That's a real thing. And I think that the Federal Reserve has enough leeway. They can wait 6 months to see how that's going to happen, and it won't necessarily create a recession. But mark my words, if those interest rates stay high much beyond that, it will create a recession because we are creating insane amounts of value, and there is not enough money out there. And it's basically like the conditions that kept the Great Depression going for so long. They needed to print money and they wouldn't do it. And you get into this point where like nobody can borrow money to start new companies, to create new jobs, to right? So like you have existing companies and they're using AI and they're making insane amounts of money with their AI. And meanwhile, nobody else can start new things. Like you get all of these people that are displaced and there's nowhere for them to go. There's not able to put them into new industries or anything like that because nobody can borrow money to start new companies, right? That's the risk that I think we run. Well, so that part, I should have elaborated and say, given today's dynamics in place of the fragile state of the inflation, lowering rates would certainly lead to inflation. I don't think that that's necessarily true. I think that it's a 50-50. If borrowing requires the creation of new money, that's a problem. Why? I mean, it's not that it requires the creation of new money. The creation of new money is borrowing. I tell you. So this is an insight into the way that money works that I really think is super powerful. Like once you understand that's what money is. Money is debt. The decisions that you make and the way that you should approach things in the economy become much, much more clear. Okay? You have to have debt because the things that we want to do is always bigger than the things that we've already done. I mean, that's what growth is, isn't it? Right? I suppose perhaps there could be some point at which the world reaches an equilibrium, right? Like the population isn't growing or staying the same. Or sorry, it's not growing or falling. It's just staying the same. The sizes of the economies are generally just staying the same. Well, but you would continue to see efficiency improvements, right? So the amount of value that we're making is always increasing. That's why you need debt, because the value that you're going to create tomorrow is going to be more than the value that you create today. And if you don't have debt, then there's no way for people to finance things and do those ventures that will create new value tomorrow without it taking away from the value that we already have. So you have to have money. You have to have debt. It's inevitable. Like, I think is like the quintessential like proof of this, because some people's conception of money is like gold, like we want a gold backed standard, right? There's a certain amount of gold out there, and so we can only have a certain number of dollars relative to the amount of gold, and that way the value of my dollar should always be equal to this same amount of gold, and you don't experience inflation ever, right? And the flaw in that system and the proof that doesn't work is that they always end up printing more dollars than they actually have gold for. Right? Like that's why we went off of the gold standard, was because we said, well, yeah, you can redeem your dollars for gold. And so then Francis started doing it. And we're like, no, you can't do that. And so we stopped redeeming dollars for gold, right? Like the simple fact of the matter is that modern economy could not run on a commodity backed currency. It wouldn't work. Like you can get away with that when it's like super small, but when you get to an economy this size, that like inability to create money and finance things becomes like a huge problem.
Block cell.
Right? Now, I think that the reason that people feel the way that they do about that sort of a thing is that you don't think that you have access to that money. Right? It's like, well, I'm doing all of this work to get money, and then meanwhile, somebody else can just print it. They can just print it and do whatever they want with it. That's not fair. Well, it's not fair. Looking at all this stuff that's going on with USAID, because that's kind of the situation that's going on there, right? The government is printing debt to finance their government operations, and then they're like literally just laundering it So that is like money that's being created that government bureaucrats and everything are just wasting, which is a problem, right? Like you have print a certain amount of money. The more of that money that is going to actual development and growth in the future, the better the economy is going to go. So if too large of a portion of that is really just going to government bureaucrats and entrenched rich people to accomplish nothing, then that's a big problem, right? Okay, but in the past 15 years before COVID, when interest rates were low, the reality is that you could just print, you could have access to that money. You just have to have a good idea, right? Because the whole thing is that we need to get as much of that money into developing productive things as possible. So you have to have a plan about what you're going to do with it. But otherwise, it's absolutely available to you. And most people just don't realize it and don't have the guts to go and do it. Have you ever taken a look at an inflation chart from before the 1930s? Well, I would assume that it would be relatively flat though. You say before 1930, like that there's like a specific thing, but that's back and forth. That's not a big enough chart. I would expect that you would kind of see like things like this, and then after we go to fiat currencies to see it go like that. Yes, probably. Because after that, we're supposed to have a consistent 2-year inflation. But I think that the thing that you would see is like, okay, like you're going to see moves like this, right? But then the slope of the inflation after that is going to be like this, right? So like here, the year over year inflation is going to be average 2%, right? But if you look at the slope of some of these other lines, you're going to see points where it's significantly more and significantly less, right? Because basically what would happen is you would have issues like, okay, somebody just discovered a bunch of gold. That's a lot of supply in the market. That means that your money is worth less, right? A country decides that they have too much gold and sell it. That's a problem. And so then like your economy would go down. And then, you would have other situations where there would be like, well, we're just going to print dollars and hope that nobody notices, which was what would always happen. Like, I wouldn't say that it necessarily happened in the United States, but you go back to, they've been using gold for thousands of years. That's what would happen. Is the bank would the bank would say, okay, we're going to hold all the gold and we'll just give you notes, and then they would print more notes than they had gold, right? So what always happens. Other monetary actions out COVID are, well, so the thing that's interesting about that, though, Tilt, is that the latest studies that I've seen on this suggest that, like, the actions that they took at the beginning of COVID, like especially the Federal Reserve actions that they took at the beginning of COVID, were necessary, and that many of the actions that Congress took were necessary, at least in terms of like, okay, we need a certain amount of money created to deal with this problem. Yes, they had to do those things. Although those individual policies were crafted in really, really poor ways that probably contributed to the inflation. Okay. Like this thing where it was like with my wife, she made more money not working than she did. Like she made more money on unemployment during that time than she did from working. That was kind of a problem, right? That's okay. But then what happened was things recovered very, very quickly in the stock market too, by the way. And the Federal Reserve did not adjust the policy accordingly. They did not raise the interest rates accordingly and reduce their, draw down the balance sheet and all of those sorts of things. They kept it very easy for too long. And that is why inflation got really, really wild. Now, when we look at the situation that we have now, lowering interest rates to 0.25 now would be incompetent. Well, if we were to do it overnight, sure. But what I'm saying is, I think that in the current economic conditions, that probably they should be reducing interest rates in March by 1/4 basis point, and they should be doing it again in June, 1/4 basis point, and then waiting. And what we're seeing right now is that the market thinks that maybe they will cut in June, right? If we get to June and they don't cut, well, then that probably means that the situation in the economy is very different and like everything really just looks up. But I'm very, very skeptical that that would happen. Because like I said, the tech sector is just hurting. It is just hurting. And I don't think people realize how many of these people in the tech sector are just, cannot find a job. And there will not be any relief for them until there are interest rate cuts. Like it's just that simple. I don't know if there's any way out of it. There has, you either stay in the market long enough that you get lucky, but there's, this like high level of people that they've been unemployed for 6 months or more. That number is going to stay high until they cut interest rates. And the problem with that is that that group of people is like the group of people that have driven the most economic income growth over the past 10 years. So those are the people that are doing really well and are spending and this and that, right? So if you then keep interest rates where they are and companies continue to do the way they've been doing, like I think with this Microsoft thing, for instance, that's kind of like your standard, you cull a certain amount of the workforce every year. So I don't know if they're actually increasing the number of layoffs overall, but as the year goes on, I think that you would start to see the layoffs increase and that group of people get larger. And there's a point at which it becomes large enough that it would just straight up kill the economy. And it would probably happen very, very quickly too. Right? So then all of a sudden it would be like, oh, whoops, we screwed up. We're having a recession now. And then they'd bring interest rates back to zero for sure. Right? JP Morgan Chase will deliver gold bullion valued at more than $4 billion against futures contract in the New York in February per Bloomberg. See if that's enough. I'm short. Can you pull up the cost basis? Yeah. So the cost basis this morning is a little bit weird. Oh, you know what? This one is screwed up. I need to reload historical data. I was going to say, like, there seems like there's a certain like behavior with the way that it goes. And I have yet to run into a situation that did not work. Oh, it's still loading. It's still loading. I have yet to run into a situation where it doesn't do that sort of thing. And like when it's not, there's probably like a problem with the chart, like with the data in that case. I did find one case where it was like, what is going on? It just made zero sense. Okay, so in this one, it looks to me like we're in a range-bound market. There was a bounce at the break-even point, but there's often bounces in here and there was not. So this looks to me like actually a unique situation, which is we are in a range-bound market for now, but there are big players in the market. And you can see like here, right? There are big players in the market. So we'll see if the selling breaks out here. And we will watch 15.5. But that you know, if they're ignoring the cost basis lines like that, that is kind of a sign that there is a large meta order in the market. So somebody commented on that video yesterday. They were like, you should be ashamed of yourself, Seth, because that's not empirically proven. Well, okay, look, we've done everything that we can to try and empirically prove it. And of course, there's always going to be this certain spot at which you kind of have to take a leap of faith on certain things. I think one of the reasons why I harp on the empirical evidence thing is because people believe in these strategies that we have empirical evidence that directly suggests that those things aren't going to work, right? But like I actually was kind of glad that he said that, because then my mind started going into, well, like, how could we really definitively empirically prove this? Because I had only been thinking of it from the perspective of like, okay, I can do a back test. The other day we started doing some statistical tests, like with co-integration, that did behave the way that we thought it should. So I think that was a good step in the right direction. But to really, really prove it, I think what we would need to do is we would need to have data from the exchange and be able to go in at any given time and say, here are all of the designated market makers. What is their average position put together? And see what that looks like compared to our lines. And that would be like the true empirical proof. And that would be an empirical proof about, like, do those lines actually tell us something about the market maker's positioning, right? And that would tell us how much it actually is, right? But there could also be a case to be made that maybe it doesn't really represent the market maker's position, but it still ends up being a significant price for some reason. Although the reason could be that there are enough people in the professional world using a model similar to this that's why their price reacts to it or something like that, right? What about Elliott waves? Okay, so I think that there is something to Elliott waves, kind of. So let me prepend it with this though, okay? You have to realize that patterns are results and not predictors. So we have some conception that if I see a pattern like that, I've seen 3 waves, so I should see 2 more. I think that that's the kind of logic that I tend to see people do with Elliott waves. That's fallacious, okay? But is there a tendency for the market to have a trend where the trend is composed of multiple waves and that tends to be 3 to 5? Yes, because that's the way that the really, really big players execute. is they have to spread it out, and they will kind of create a liquidity hole to execute into. And so they will kind of have the buying will come in waves. And that's why. So I think that Elliott waves was like a real observation, but it's not a good strategy. Does that make sense? And I find that coming up a lot, is that a lot of day trading, retail day trading strategies are based on things that are actually true observations about the market, but the strategy that they try and implement based on that observation is not a profitable strategy. And that's what I would say is the case with Elliott wave. Okay. Where does the Ninja Trader get data for market maker position? Okay, so let me explain what we're doing. We are estimating it. I just need to be clear. I don't have some piece of data that tells me exactly where the market makers position are or anything like that. We're estimating where the market makers position is. And the way that we're doing that is we're watching the orders that are coming in. So when there's an order comes in, there's the first thing. I'm going to get like way too deep into it. Okay. If that's okay, if I'm getting too complicated, just stop me. I'm going to go way too deep into this. Okay. The first thing is you have to sign the orders. So every time that there is market volume, I will look at the level 2 or market depth data and determine whether that order was a market buy or a market sell. Okay. So I have signed all of the order flow and sorted it into prices and put it into a data structure. Okay. This is like a footprint chart. Okay. I have all of the orders. I have all of the sell orders in one and all of the buy orders in one, and I have the prices that they were done at and everything, right? Okay. So you gotta have a situation where like your footprint chart is going to look like this, right? And I'm just putting random numbers in here. I don't know how this is going to work out, but so now I make a couple of really broad assumptions. So it's kind of like an agent-based sort of thing. Is I create an agent and I say this agent, he is going to take every fill on the buy that he can, and then any chance that he has to take it at a profit, even if it's one tick, he will also do that. Okay, so I can come in here and I can say I bought 1 and I took off 4. So from here, I don't have any contracts still long. Okay. Then here I bought 3, but I sold 9. So I don't have any here as well. Here I bought 5 and I lost 4. So I have 1 contract on here. Let's keep going. Right. Now so I have 1 contract still on here. I picked up 13 here and I took off 3. So I actually have 10 here. And I had actually it's not that. I would take this 1 off first. So this now becomes a 0 and this becomes a 2. And then so I actually have 11 here. Is actually what happens. Okay. So basically I start from the bottom and I go and I say, for this person that's always buying here, entering a position here and exiting a position here. And you do all of that and you might end up with, inventory at multiple different prices is what's going to tend to happen. So let me try doing it again. If I'm going to have like 5 and this is going to be, let's start over. 5 and this is going to be 3 and this is 8 and this is going to be 2 and 12 and 5, something like that, right? Okay, so now when I start doing it, I have 2 contracts up from here, right? Because 5 minus 3 is 2, right? And then from here, I'm going to have 6. And then from here, I'm going to have 7 contracts still open, right? Because there was not enough contracts traded on the offer for me to completely wind down that inventory, right? So I'm going to have these contracts still on here. And then I basically take the weighted average of these. And that is where the lines are. That's how you get the line. Like, that is the exact algorithm that you use to get the line. Programming that is actually, well, you can kind of do like a naive, straightforward way of doing it that is kind of like really messy and sucks. But I was able to like really, really optimize the logic and make something super, super clean. So I won't share my code because I think that there are some innovations in there that are really cool and I don't necessarily want everybody to have. But I did not come up with this idea. It's over there on the Futures.io forum. You could program it for other platforms, and it's just nobody has bothered doing so because they don't know that it exists. If this started to get popular, like that video popped off, then I bet you would probably see it on other platforms. Is there enough evidence to say that would be the end of Treasury's last day trend yet? I do not know what you were referring to that. Elliott waves, it can be viewed or used as a set stone 3, primary 2 corrective waves, but it can be helpful as a general guide for how markets move. Yeah. Like I said, I think that there are real observations being made there, but there's not a profitable strategy based on it. That basically, if just this is how it's executed, it creates trends. No. So what creates trends is a really, really big player persistently buying the asset over time. That's what creates trends. So there's some guy out there, and what would be a number that would make sense in the current treasury market? He needs to buy like 50,000 contracts, right? I can't just come out and buy 50,000 contracts all at once, right? That would move the market. That would be crazy, right? So what do? I split it up. I say I have all day to execute it. So I can execute, a certain number of contracts every minute or something like that. And so they're just persistently buying just kind of a little trickle throughout the day. Now there's some tricks. One of the tricks is that if you create a trend, it starts to freak the market makers out. And the market makers will say, oh, I have too many contracts taken on here, so I'm not going to put any more liquidity here. And then what happens is that you get an area of low latent liquidity. And if there's low latent liquidity here and there's high liquidity just above it and just below it, then it's just going to stay in that price. And so then what happens is that this big buyer, they don't have as much liquidity to execute against, but it stays there for a really, really long time. So they can kind of slow the trickle. So like maybe before they were trading like 100 contracts per minute. Now they're only trading 50 contracts per minute. But because it stays there for so long, they end up executing a huge amount of volume within that hole. And that overall reduces their impact on the market, right? That's why it goes in waves. So they execute really hard to make the hole happen. And that's when you start to get this square root law behavior. And then they stop and it kind of falls back and then they execute in that hole forever. Right? If I were to draw it to scale on a time scale, it's like this. This here tends to be 2.5 times this. But I digress. So that's what creates trends. Are there bigger players than market makers? Yeah, well, yeah. Like a sovereign wealth fund is a bigger player than a market maker, right? The biggest in the treasury market, the biggest players that we have to deal with are sovereign wealth funds. But this pattern right here, it's created by the way that these large meta orders are executed. The optimal way to execute creates this pattern. Can you say that again? I came in late about the market maker. Well, somebody asked me, are there bigger players than the market makers? And I said, well, sure. I mean, like a sovereign wealth fund is a bigger player than the market maker, right? Is there a place where you can buy their execution data from sovereign wealth funds? I think so, actually. Because sovereign wealth fund doesn't do it themselves. They usually give it to a block trading firm like JP Morgan or Goldman Sachs, and they execute it for them. You seem overly concerned about the why. It doesn't matter why the trend occurs. What matters is, to a trader, is can he recognize a trend or a range or a channel or execute off of it? Okay, I'll explain to you why it matters. So there's a couple of different conundrums within economics that we haven't been able to figure out for hundreds of years. One of them is the market actually efficient, right? Well, it seems to everybody that the market is efficient, because if the market was not efficient, wouldn't trading be easier? But because making money from trading is so insanely hard, that must mean that the market is pretty efficient, right? But then there's kind of contradictions in that. Like, okay, but if the market is efficient, why is there so much volatility, right? Like, if the market is efficient, then the market should only move when something has actually changed that would have a material impact on the market. But there is more volatility than that. And in fact, some of the most volatile moves that we see sometimes, there's like no economic explanation for them whatsoever. They are what we call endogenous moves. So some sort of move created by dynamics within the market itself that will create a really volatile short-term move. So this is called the excess volatility puzzle. And so they started, there's all these different theories about this sort of a thing. And kind of what happened was that there were people that needed to execute really big orders out there, and they kind of said, well, if I'm really big, if I have infinite amount of money, how would I size my position? Because if I come in and I'm, I think that it's going to be here, then does that mean that I should just trade an infinite number of contracts here? Right? If price is efficient, then it should stay here until the point that there's like a piece of information everybody knows and it's going to move up to here, right? But we find that that's not what happens. I come in and I start buying a ton of it. The market moves. It moves the market. We know that it moves the market. So then the question is, how much does it move the market? If it's at 18 and I know that in an hour it's going to be at 21, what is the optimal number of contracts to trade to make money off of that? In other words, number of contracts to trade that will make it just go straight to 21, right? And so there's this guy named Albert Kyle in 1985, and he wrote a paper called Insider Trading and Continuous Auctions. And he kind of had this model that based on the volatility of the instruments and the amount of volume that was traded and all of these sorts of things to make a model that would explain to you what the optimal number of contracts to trade would be. And his thinking from that was from the perspective of the market maker, right? Because if I'm a market maker, the thing that kills me as a market maker is a trend, right? I have to put liquidity out, and they're going to execute against that liquidity, and they're just going to keep pushing it and keep pushing it and keep pushing it. And there's a point at which they push it so far that I'm kind of screwed. So what do I have to do? I have to pull my orders. I don't offer as much liquidity there. What is the point at which I should not offer as much liquidity? And Albert Kyle answered that, right? So we start going deeper and deeper into it. And we say, okay, let's do that now. Here's the optimal number of contracts. We're going to go into the market and trade that number of contracts. And how does it move? And then they could kind of find, oh, actually, it follows the square root law. Albert Kyle didn't know that. His model didn't factor that in, but you can add it in the model. Oh, it follows the square root law. What is like the most, and then, things like Almgren, Chris, and all these, and TWAP, XE, all these things to like, I'm going to do that order. What's the optimal way of doing it, right? Meanwhile, there's these guys out there doing momentum strategies. And they're like, okay, the market's not efficient. Like, we know it's not efficient because we're making money from it, right? This is the momentum traders in the 80s, right? So they start going down this other path that is like, okay, why is that? How is it that we're able to make that money if the market is actually efficient, right? Because trading is hard, but momentum works. What's with that? Okay. And you kind of start to get to this point that is, well, because it's the orders that move the market, and we know that orders move market, if I have some sort of statistical pattern sort of thing, especially in the short-term market, I go and I trade that. Trading it changes that pattern, takes it out of the market. But if some piece of news comes out, how far it moves is going to be based on how many people trade that move, and not like what the actual price is. So you get to this point, which is that we discover that market efficiency is more complicated than that. The market is statistically efficient, which is to say you can't analyze a single time price series and really find a profitable strategy in it. But it is not informationally efficient, which is to say that if you were to take all available information and price the asset, that the current market price will never match that actual true fundamental value. Okay. So now we start to get into, okay, so we know that the orders move the market, and we know that those orders in moving can create trends. So what creates the trend? And so they started trying to model this. And people initially thought, because like technical analysis says that it's the psychology of people, right? I see that it's moving up, so I get in, and everybody else, and you get this mania, and that creates the trend, and then the mania will go get too crazy, and then that's like the end of it, right? And you get a head and shoulders pattern, and things reverse, and all of this sort of thing, right? Like this is kind of the technical, because the technical analysis doesn't necessarily say that the market is inefficient. They kind of say that like, the market is efficient, but that trends do exist, and that you can use this information and the psychology of the market to predict when the trends are going to start and stop, right? Except for that when I start testing individual technical analysis setups, it doesn't really work out like that. So what's with that? How do we explain these conundrums? So they start making models, and they say, okay, here's one model where this one guy, he buys, and other people see that he's buying, and then other people see that they're buying, and so they use the same kind of a model that you would use to model like nuclear fission, right? This is because it's like an atom will explode, and then based on how close the other atoms are, that will hit other atoms and trigger them, and if you get enough of it, it will create this combustion, and then that would be like the creation of a trend, right? And when they did that modeling, they found that it did not match the empirically shown stylized behaviors of markets that we already have. Basically, it didn't work basically. So they tried something else, and they said, okay, what if it's just, there's this one guy? What if it's just one guy that's just persistently buying? Like, what if this whole trend is created by one person? That they're just so big that they have to buy over a long period of time, right? And when they went and they started modeling that, then all of a sudden it matches the market data perfectly. So that is why we believe that trends are created by large players buying something at once, or groups of people all trading on the same premise that end up acting like a large buyer. Okay. Now, once we understand that, okay, so they wanted to understand that to explain these things in economics, right? Why does it matter to us as traders? Well, because us as traders, we want to catch a trend, right? So if we understand what creates the trends in the first place, we can potentially predict them. And that's where it's a really, really big deal. Because now I understand, it's a sovereign wealth fund that's causing it. It's an index fund rebalancing that's causing this trend. It's, maybe this time it was news. Sometimes, like earlier in the week, it was that news, right? Okay. That allows us now to create a more complete model of the market. I can say, here's all of these different people. And they all have different ways of doing stuff. So they're all, going to take all of these pieces of information. Like, for instance, if it's a sovereign wealth fund, well, then they're just going to do stuff that their politicians they'll tell them to do, generally speaking. I don't know how a sovereign wealth fund works, actually, to be honest with you. But like, if it's an index fund, okay, I need to look at how many people contributed money to my fund this month, how many people withdrew money from my fund this month, what assets made and lost money that month, and therefore, I take all that information and I do an analysis on it, and I determine how I need to rebalance my portfolio. And out of that comes an order. 60K, buy this thing, right? That goes to the market. So now I have, orders. Orders are what moves the market. So if I know what orders are coming, potentially, and what I can do is I can model all of these different players and kind of see that this guy is going to buy 60K today. This guy is going to sell 20K today, right? And I combine them all together, and I know what the orders are going to be in the market, and I can therefore predict price for that day. And that's where it all kind of comes together. Okay. It's the whole thing. If you're looking at the chart and you're going to say, oh, well, all I need to know is that there is a trend or there isn't a trend. You can't tell that from the chart. By the time that you can definitively prove that there is a trend, that's exactly the point at which the market makers go, oh, there's a trend. I better start pulling my liquidity. It creates the liquidity hole. You get stuck in it. You see? You see where it all comes together. There's all of these spots that seem like they're super far apart, but when you start putting them all together, then it starts to make sense, right? You come in, I'm going to try and trade the trend. Okay, I'm waiting. This isn't quite far enough for me to be a trend. This isn't quite far. Okay, now I'm really sure that we're in a trend. I'm going to get in. And then what happens? It goes nowhere. You've all experienced it, right? Why is that? Because once the trend is obvious, that's exactly the point at which the market makers start to pull back, providing liquidity, and the square root law starts to come in. So it doesn't work. Again, if you are trying to predict the market from only the past price, I'm just telling you guys, you're probably not going to be successful with it. I'm not going to say that it's impossible for a strategy like that to exist, but if you were able to find a strategy like that and prove it, like you wrote a paper and showed the historical backtest of it, and then you showed that you actually traded it for 5 years and you made money from it, right? Like an intraday strategy like that, or just on one asset. You only ever bought and sold S&P 500 futures, and the only piece of data that you were looking at was the past price of the S&P 500, okay? If you created a profitable strategy like that, you would win a Nobel Prize, okay? That's just that. This is like the thing that everybody has been searching for like literally hundreds of years, and nobody has been able to prove exists. And everything else that we know about the market kind of says, if there's a pattern, if there's a short-term pattern, it gets washed out because it's really easy to wash it out, right? So you have to take a different approach. Okay, the orders are what moves the market. Is there actually information that can predict the orders? And it turns out actually that there is, at things that have absolutely nothing to do with what the current price is. Right? If there's no way to recognize market behavior, then the market makers wouldn't be utilizing the same playbook day after day. Well, so I think that you misunderstand how the market makers make money. Because the way that the market maker makes money is just being at the front of the queue, man. That's all I got to do is be at the front of the queue. And, then there's all of these little things that I add on the front of it. Okay, like there's correlations, etc., right? Okay. Market making is a profitable strategy, but the inefficiency that they're taking advantage of is just, the basics of the game. That, there's this one tick. And if I'm at the front of the queue, I can like constantly take profits as people execute into both sides of it. Okay, right? There's only one problem with that strategy. What is it? If there's a trend. If there's a trend, then you get screwed when you do that, because then they continually push you up and you end up owning all of this inventory. So I have to be able to tell when there's enough trend to reduce the number of contracts that I'm taking. But in doing so, it kind of kills the trend. Right? See, when you say playbook, you're making some sort of this, guess that like, the market maker sees that all of the retail traders are long now. So what I'm going to do is I'm going to push price down and stop them all out first. And then once they've all stopped out, then I'll make price go up to where they thought it was going to go anyways, just to piss them off, right? It doesn't work that way, man. It doesn't work that way. They take on liquidity. They take on inventory by providing liquidity. And then they manage their bids and offers based on that. One thing that you might do is, if I have a lot of inventory long, I might not want to have as many offers out there because those offers are going to prevent price from coming up. So I will pull my orders, make it easier to move up. But somebody still has to come in and market buy it to get it together, right? So you'll see that sort of a thing. But The whole thing is like imagine just for a second, like this is where like the price action thing is like so ridiculous. Okay. I have a level of support and we've come down to this and we've bounced off of this support before, right? I'm going to push it down and then take my profits here, right? And then, you know, it's going to come up, right? Okay. So how am I going to do that? I'm going to sell to make it move down, right? I'm going to take a short position to make it move down to trigger the retail traders' stops. And then, you know, turns around, right? Well, but what if there's a large meta order that's buying at that time, right? You're selling into it. Hey, he exhausts you and then it's going to go up. Like, you're screwed. You just took a short. You just took all of this inventory short. They moved it up to here. And now you're going to have to bail and it's going to make it move it like that. Like, it's a high risk play. They don't play it like that. They just, they don't. Tilt, to be quite frank with you, based on all of the interactions that I've had with you on the stream so far, I really don't think that you have a fucking clue what you're talking about. And the idea that like you were on our level in third grade and you're light years ahead of me sounds like the biggest red flag for doing. I can't remember to say the name. You guys know what I'm talking about. Come on, man. Like here's the thing. I didn't make this shit up. I didn't make this stuff up. Okay? And I didn't get this from some other retail trader either. No, I'm not talking about you, Pedro. Yeah, I'm getting Navy SEAL copy pasta vibes. That's exactly it. Guys, I didn't make this stuff up. I didn't get this. I didn't, you know, like I have a mentor. He didn't teach me this stuff. You know where I learned this from? Peer-reviewed studies. Read the book. Peer-reviewed research. And the quite frankly, if you get people talking about things relating to market microstructure and trading, and they're telling you something different, basically means that they haven't read the research and they don't know what they're talking about. Yeah, you have made some good calls, Pedro, but you do cryptocurrency stuff, so I was kind of like, I can't really pay enough attention to know like what you're doing or anything. See, let me tell you what's really, I think is going on here is I've shared with you all an empirical view of the market. I've explained to you like why they were looking at these things, why the studies came out the way that they did, and how that informs our current view of things. It didn't match with what you think of the market, and so you're just rejecting it because it doesn't line up with what you thought. You'd love to see the data on the performance of the cost basis? Well, so I think that this is where if you were to use it as a take profit zone, I think that you would find it's pretty effective. I think you got to be really careful about like, okay, when we have the cost basis, it's like, oh, that's super amazing. That must mean that you should be making like millions of dollars from it. Well, no, right? Like it tells us one thing about the market, but everything that I just told you, like really think about it. Really think about it. Everything that I just told you. What really moves the market? Orders. What really causes trends? Big, large meta orders that are executed over long periods of time. What does the market maker do? The market maker is just trying to make money off of the spread. Okay. So what does that mean? That means that the market maker's position is not really that predictive about what's going to happen next. Especially if there's a trend, right? So that might be able to tell you something about when there's not a trend and we're not expecting a trend and how things might play out in those situations. But it's not going to give you the best trades, which are the trends. Hmm? That's why, like, the way that you play it is, I don't think that there is supposed to be trend today. It's going to be range bound, ergo, they're going to bounce off the dotted line, and I take profits here. That's a trade. That's the way that you use it in that situation. Maybe you thought, it's not going to break these lows. It's going to come back up. Look at where it came. Like, come on. Hold on. Wait a second. Do we have enough? Yeah, I think we do. Need to get rid of that though. Okay. Let's go to yesterday. So you need to scroll back. Now I have this little indicator on it that like colors it differently. I don't know if you can see that. Okay, here's yesterday. Bounced off the line. Kind of bounced off the line there. But then the rest of the day it hugged it. Okay. So we can see it reacting to it yesterday. Let's go to the day before that. Okay. Day before that. Day before that. Here we go. Okay, so here was a trend. Here was a trend. Again, it's not going to work when there's a really big trend. Although this one was weird because it was like this huge trend and then it collapsed so quickly, right? Okay, but look, right here. Right here. And like the thing is, these are like hard bounces, almost to the tick. Well, I guess it'll go through it by one tick sometimes. But most of the time, it's like literally to the tick. Okay. We're only looking at like a 3-hour period of the market, by the way. So, okay. So here's an instance where, okay, there's right there. This is kind of a bit more of a range bound day, right? We've gone through like what, 6 days now? Still going. Here's a day. I'm actually surprised on this one that there's not a bounce like right here. But okay. This is a little that when you're getting up to that line, you kind of gotta wonder a little bit. Well, like here's the thing, if you look at this, right? Like that's a pretty strong trend, so. Okay, I don't know what's going on here. Looks like there's some data missing on this one. Okay, here's a move. Look at that. It was like this was PMI, right? PMI came out, where did it go? To the tick, to the line. Okay. Here we are. This is the day that I like to show the most. Okay, and here's a trend. This is at this point, you wouldn't want to do it, but it is still kind of hooked that line. That's kind of interesting. Oh, and that's it. How many days do I have on this chart? 15 days. So I just walked through 15 days and you can see price reacting to it in the most active hours of the market, almost to the tick, literally every single day in that data series, except for one where there was data missing for some reason. I don't know what's with that. I already like reloaded all historical data, so I don't know what's with that one, but. So tell me, is that random? Well, like here again, the thing is I could say like, okay, every time that it comes to that line, trade against it for a bounce or something like that, right? I think if you did that you would probably find a strategy that is on a risk-adjusted basis break even, essentially. Probably. Just like with VWAP. Like, tell me, is a VWAP a pure point of significance? It seems to me that it is. It seems to me that if you've bought below the VWAP, that you've gotten better than average execution, and so that ends up mattering to people, right? And yeah, does price react to that VWAP? Yes, it does. First time that you come back to the VWAP, very, very strong possibility of a bounce. But if you trade that bounce thing, that doesn't necessarily result in a profitable strategy, right? So does that make VWAP useless? No. Still something that can be interesting, or that you can pay, you can keep an eye on. And perhaps if you have more information about the market, maybe you can potentially then turn it into something profitable, right? Which is what we're doing. But I really, based on that, the other thing that we did, I think it would take too much time for me to pull it up here, but you can go back and look at a couple of days ago where we looked at it for co-integration, and we looked to say, is the movement are the cost basis lines a component of the larger price? And it seems to say that in periods when we're not trending, that yes. So we'll go between when it's trending, it says very much no, and then when we aren't trending, it says very much yes. So that's what we would expect. Maybe there's some flawed logic in that. I would need to get a researcher and statistics and everything to maybe give us a better idea of if that, maybe because what we're doing is generated from price to some extent. Of course, you have to have order flow, but, so maybe that in and of itself makes it a flawed test. Possibly. I don't know. But like that's the testing that we've done. And then what I would really like to do is I would like to get, some data from the exchange. Like there are some data sets like this out there. I've seen research studies with this stuff. So we would do something where like, we would identify which guys are the market makers and track all of their trades to determine like what their average position was at any given time, and then compare the cost basis lines to their average positioning and see how reflective of the market maker's positioning it actually is. Okay, so it's also saying something else that I want to harp on here. Okay. I think there's two things. Number one, even if you got something that's really, really super powerful, proven understanding of the markets and everything else like that, you gotta remember the market's not informationally efficient, right? So that means that I could know something. I could know something really, really big and still lose because the market is so informationally inefficient, essentially, right? So what it kind of tells you is like there's like really, really big place for edge, but even having tremendous edge, it's really hard to like be super accurate. That's why you have to have a scale. You have to have scale. So the reality is that a retail trader, the amount of money that you can make as a retail trader is quite limited. So even if you're doing really, really well, even if you're doing everything right, the amount of money that you're going to make is be pretty limited unless you're already trading really big, right? You can take risks and gamble and make a ton of money that way and size up, and then maybe, but like the general thing here is like, when it works, that doesn't make you a millionaire. Okay. It'll feel good. You'll be happy. You'll be able to keep trading, but it doesn't make you a millionaire. So that's the first thing that we got to go and put in. Okay. The second thing about, like, you wouldn't be selling indicators on YouTube. Well, first of all, they're not crappy indicators. I think that they are the best set of analysis tools on order flow that you can possibly buy out there. And they're definitely the best set of indicators that you can get for a NinjaTrader. And I'm very proud of the product that I've made, and I've done very good. And I have, it gives you key insights that you can't get anywhere else, and it does very valuable, useful things that you're not going to get anywhere else. So I take offense if somebody says, calls them crappy indicators. I'm kind of like, well, they're not crappy indicators. They're the best indicators out there. They really are. But there's this other thing, which is like, well, if it was so great, you wouldn't have to sell it. Here's the thing. Do you want good indicators? Do you want good content on YouTube? Because if you want those things, you have to reward people that are providing those things. Okay? These people have this idea that, like, I'm supposed to provide all of this out of the goodness of my heart, and then you're going to make your living off of the trading itself, even when, like, making your living off of retail trading is just a stupid idea to begin with. Okay. But maybe for me, well, I don't have a job right now, but when I will eventually get a day job. It might be like way too far in the future. There'll be some real problems because I really do need lower interest rates. But I got some stuff set up. Maybe we'll fix that soon. In normal times, I do really, really well. Okay. Like the reality is that I do so well with my day job that it doesn't even make sense to go and trade for a firm. Okay. Unless I was really going to be like a big heavy hitter, but like to go over and become a junior analyst, it just doesn't make monetary sense for me, unfortunately. Okay. So it's not that I need the money. Okay. But there's going to be all these other people that is like, somebody else that maybe works at a bank or whatever, or has done research and they know stuff and they have things that they can share on YouTube that would be valuable to you. Right. And like, why should they go and spend all of this time creating content and doing all of these things if all they're going to do is have people with Dunning-Kruger syndrome insulting them on YouTube all the time and yada yada yada, right? Like, why would you put that effort in, right? There has to be a reward in it. So yes, I try and make money from the YouTube, and I try and make money from the indicators, and part of that is, if only to show people that might have some value to give the world, that they will get compensated for it if they do it, to encourage other people to create content. Because at the end of the day, what we really want is good content. Don't we want more good content about trading and more good analysis tools to help your trading? I kind of feel like that there's a lot of retail traders out there that really just don't want there to be good content. You know what I mean? So I harp on that because I think that a lot of retail traders have an attitude that actively prevents good content from being created. So stop saying that, guys. Yeah, it's true. We would like to see people that have made money from trading, but let's just judge the content for what it is. Is it good? Like, does it provide actual real insights where we have substantial evidence to suggest that it's good insights and that it can be useful and beneficial to you, right? Or is it just trash that, like, I heard from this one guy that moving average is really good, and They're telling you things that, like, if you've really been in the trading world, you already know. That's what most YouTube content is, right? If you want content that's better than that, you have to reward that content. I would like to see you sell your indicators to some hedge or prop firm. Well, so here's the thing, is that I really think that cost basis in particular, I really think they already have it. I really do. Like, there's no way that it would be that precise. Somebody else has it, man. I'm telling you. It's not just us. Like, there's this thing, like, okay, so I could, like, rent it to Goldman Sachs and they would use it. Well, first of all, I literally told you guys everything about how it works. So a talented programmer like myself should be able to take that information and make it themselves. Really could. Really could. I don't think that they would write the code as well as mine has, but they could duplicate that particular part of it. But I honestly also think that Goldman Sachs might already have that. They already have something that they're looking at that gives them the same thing. Serious. Can you quickly summarize what are the signs where you say this trend and this is not with your indicators? So you don't want to use the indicator to do it. Of course, after the fact, we can say there was a trend and there was not a trend, and ergo, this particular thing didn't matter or whatever the deal is, right? But that doesn't help you make a trade, does it? Right? You have to be able to predict whether there is going to be a trend or whether it's going to be range bound. So it seems to me that today you are going to be range bound, but you are going to still have relatively large buyers coming in and doing things. So I would expect us to go back and forth across that. And that is kind of what we're doing, right? We bounced off of this over here, but I think that we should be crossing these lines all day probably. Because there's going to be large players in the market, but it's not going to be like a breakout. If it was a day where, there wasn't like big news going on and things like that, then maybe it would really be more close and bouncing off of it more. Right? So the way that we determine whether it's going to be a trend or not is based on doing our analysis of the order flows that are going to come into that market that day, and right, because then we add all those together and that can tell us if there's going to be a big imbalance or not. So we can predict ahead of time if it's going to be a trend or not a trend, right? And that's the whole thing, is that's what I base my trade on. Like, I only took one trade this week so far, really. It wasn't on Tuesday. Or was it the PMI? No, it was the JOLTS. It was JOLTS. On Tuesday, I took a trade for JOLTS because I predicted that the JOLTS was going to be light and was able to anticipate the orders that were going to come in. And I was also able to get out at a pretty good spot. Obviously, I could have held it much longer because it ended up into a trend that went all day, but I got at least out at the top of at least a short-term high. Your hypothetical stop-out zone is a secret ingredient to that thing, in my opinion. Well, yes. I think that is one of the things that makes it super, super valuable. But it's also like the thing that, because the guy that I got it from, he didn't really have that per se. He gave me the idea to make that. But I went in and I made it, and I ended up doing it completely different from him. And the way that I do it is like mind-boggling sometimes how accurately it can predict the end of a trend. You know? But it still comes down to this thing that's like, the past data does not predict the future data very well. So, you know, if this is not going to tell you that a trend is going to come in, right? But it does a really good job at telling you we're already in a trend, or you're already anticipating a trend. Where might that trend end at? It's really, really good at that. So I think that the true test of this would be, let's go and find all reversals. Let's go find all like reversals, not reversals, but like either it reversed or it pulled back, right? And we'll just assume that somehow you were able to catch the low of the day, okay? And then on all of those moves, we'll run it through two different exit strategies. One exit strategy will be that you get out one tick below the nearest cost basis line. And another strategy will be maybe a time exit. Like maybe we'll exit after an hour or something like that, right? And see if it performs better than the random. If that exit performs better than random. That would be like probably the best test for the way that we use it, at least, right? But that's something that's a little bit beyond what I can do with backtest, unfortunately, because I would have to identify all of the, like, the, you know, I would have to have only good trades to begin with, essentially, because the indicator doesn't tell you when it's going to reverse, right? Well, I guess you could do on the stop outlines. You could take those as reversals. But I think I don't know. I have to go back and try. One of the things is that, well, there are some kind of like really, really small differences when you do it on tick replay. So I had kind of been waiting to like collect data and things like that. But one of the advantages that this does give you is even if you're loading it on a chart with tick replay, is that when you go and you do a backtest, it's just a lot faster. So we could go back and do some tick replay backtests and test a couple of other things. You know, have you started to mess with AI agents? Well, I've been doing a lot of stuff. Usually I just chat GPT, but I've downloaded some models onto my own machine and run them and see how they work and so forth. I haven't really found a use for it that I find is super, super useful to trading yet. But there are some things that are out now where I kind of think that it would be entertaining for the stream, like that I could have an on-stream assistant, and that might be fun. But you know, I don't want to spend the money on that right now. Oh, you're starting to learn Python? Well, there you go. doing all of the pandas and stuff, that's really valuable stuff to learn, I think, because you can get into doing really sophisticated stuff with very minimal effort in Python. Can you show why the past price doesn't predict the future price very well? Is that what you're asking, D? Okay, so here's the deal. You have like a spreadsheet, right? A spreadsheet is like a or like a sheet of comma separated values, right? So I have all these comma separated values. Well, the way that machine learning works is that you pass it into this neural network of like all of these nodes, and they're all connected to each other and stuff. And each one of these nodes is what we call a tensor. And a tensor is running these, it's running floating point operations on the data that you're doing. And so what you have to do is you have to translate your data from the comma separated values to something that you can pass into the tensor. And that question mark thing is pandas. Pandas is basically you pass your comma separated value and create a pandas object, and then it puts it in one of these things where you can do all of the transformations and so forth in preparation for passing it into your machine learning network. So the way that these sorts of things, like if you're going to use machine learning, the way that it tends to go is you have your data, and then you read the data. Then you do cleanup. Because like maybe, for instance, there's like values in your spreadsheet that are missing, or yeah, like there's all these little edge cases that you want to deal with, right? You clean it. You filter it, right? You filter it. Possibly transformations. So like maybe I want the machine learning thing to look at cumulative delta. So I will take that information, and after cleaning it and filtering it, I will create a cumulative delta data series in there, right? And then once you've done all of that, you just pass it to the machine learning thing, and it'll just be like an object. It'll just be like, you know, object foo equals my machine learning object, that where I'm using some library to create a neural network. And so like all of the difficulty is in reading the data and getting the data into the form that you need. And then you just pass it to the object, and this thing like does all of the hard work for you. Like actually programming a machine learning network and all that. So like that's really complicated stuff, and they've basically created these things that just do it all for you. So all you have to worry about is the data, and then the other thing would be reinforcement, right? There's all sorts of sophisticated ways of deciding what is reinforcement, and that's another part. So if you go and there's some like Google tutorials that Google made. I think that there's like a certified machine learning data engineer or something like that, right? And they'll show you this. They'll have like, okay, here we have the ship log of everybody that was on the Titanic in a comma separated value, and then they'll show you, here's how we put it into pandas. Here's a couple of things that we got to fix in there because there's like missing values, or how do we deal with that? And then you pass it into the machine learning network, and it will tell you like, here are some factors that predicted whether they would survive or not. And it's once you go through it, it's like super crazy how simple it actually is, how much power you get from something relatively simple, you know. This is kind of the conundrum, though. The conundrum that we sit in as retail traders in particular is that the difficulty is not finding a model and like getting it to work. The problem is, one, having data to actually shove into it, having enough data, because we basically have to collect it ourselves if we want to do order flow stuff, right? Because we know that price itself is not very effective, so we've got to have other data, right? And how do you get that data in a form that you can pass it into the machine learning network? And then B, like the reinforcement bit and all that. Like how do you avoid like overfitting and that sort of stuff? And those things are not like coding things. Those are just like understanding the nature of, you know, trading strategies like that, I guess you could say. It ends up being things that are outside of computer science, at least, let's say. I don't know where you get there. They'll show you pandas and I think it's pi psi or whatever. So then there's like these frameworks. Like, so for instance, one of the things that I did was I had a thing where I ingest all of the orders that were ever executed in the S&P 500 futures. I put it into a pandas frame, I think is what they call it. And then there's this function in pi psi that will literally create a volume profile for me. It'll organize it into a volume profile, and then I just say which one is the peak and what is the value area from that. That's how I, you know, that one video where I showed you guys back testing volume profile. That's how I did that. I find that interesting that you've been doing ZT. Bitcoin is having a little bit of a falling out this morning. Bounce back and forth depending on my equity. Oh, I see. That's interesting. Okay, so D asked, like, why does past transactions not predict future transactions? Because, like, here's the thing. Like, okay, we've moved up, we've moved down. Like, again, I like this scenario where it's like, there's this level down here. We've done this. Okay. I'm the market maker. What I should do is go short, hope that all these guys will get stopped out, and then make money off of that. Okay. But the problem with doing that sort of a thing is that literally one guy can come in and screw that trade up if that one guy is big enough, right? Large sovereign wealth fund comes in, and that just happens to be when they decide to buy. It's going to go up, right? Okay, why is that guy buying? Because I think that we as retail traders, like I think that the hardest thing for us people to do is to see into other people's minds and guess what they're going to do when we don't know anything about them. Like, I'm pretty good at guessing what my wife is going to do, but if it's like somebody that you just met, how are you going to know what they're going to do, right? Well, a sovereign wealth fund, guess what? He doesn't care what price it is. He only knows that he has to buy it today. In fact, what happens is they say, okay, we need to buy X amount of this. And then they go over to Goldman Sachs and they say, okay, we need to buy it for this. What kind of price can you give us? And they go, well, based on current market prices and the impact that we think that will have on the market, we have this. Okay. And then they come in and then they're just going to buy it. And so at that point, it doesn't matter what the price is anymore. They're going to execute. They're going to buy because they have to do it. Like, they have to literally execute all day to fill it. So those orders, that set of orders that creates that trend, has literally nothing to do with anything that came before it. Literally nothing to do with anything that came before it. That's why the stat that I give you is super, super limited. What's the stat that I give you? If you go at any one time in the market and you pick out a random market order, and that market order is, say it's a buy, then you come back an hour later, it is 0.5% greater chance of also being a buy. which is to say there are large meta orders in the market, and when they're getting executed, they tend to lead to persistent imbalances in the market orders. And you can see that statistically when you look at an individual order. But it doesn't work where you come in and you say, like, we've been trending up, and so I should be able to hop on the trend and it will continue trending up. Why? Because when the trend is obvious, that's when it's already over. Pedro asks, didn't it work for Goldman? What are you talking about? I saw some things at Goldman that, like, when they were showing them to me, I had no clue what they were talking about. But I did see some things at Goldman that kind of reminded me of the cost basis. That's why when I saw this on the forum, I took interest in it. Because it reminded me of something that I had seen before, and because it was hard to program. It's not a simple function. I can explain it to you. I've given you guys enough information that a talented programmer should be able to make it themselves. But and the only reason I'm saying that is because some of you guys are acting like it's a black box, like we don't actually know what it's doing. But I've explained to you exactly what it's doing. There's enough information in there for you to calculate it yourself. What did you do at Goldman? A bunch of different things, but I was on the technology side. I didn't trade for them. Uzi says, I'm pretty sure I understand what it's doing. Yeah. You've heard us. I mean, the thing is that we've had it for a long time, right? So it's not just, I think that, like,
block by.
The whole thing and the concept is on the edge of our, understanding of the market and ability to, like prove things, I guess you could say. But we have a lot of experience with it. Okay, are we getting a piece of news here? Do I not have? Okay, hold on, my news squawk crashed here. We did have speakers today, didn't we? No. ECB President von der Leyen set to pitch CEOs on competitiveness plan. It sounds like it's coming from the ECB speaker, but so you're right. A big player can show up and wreck a trade plan that's a losing trade. It's not about being right 100% of the time. Yeah, but can you prove any sort of a statistical abnormality where you can be right more than 50% of the time? That's only based on price? I really don't think you can. It's, again, like my qualifications are the only input is a single time price series. And it results in profitable trading. Doesn't even have to match like some sort of like Sharp ratio or anything like that. If you can even just show that it's profitable, okay? There's some other qualifications. It would have to go both long and short. Five years of data. Maybe 5 to 10 years of data. Okay. And it has to be systematic, right? Can you show me a P&L for 5 years? So, like, if you were to show me a P&L for 5 years, of course, there would be a bunch of things on this list here that, like, I wouldn't be able to verify it, right? It wouldn't be systematic, so I can't verify it for myself. I suppose you might be able to show me the trade so I can see that you're going long and short, but I wouldn't be able to verify that you're only using a single time price series, for instance. But we could give you the benefit of the doubt and say that he says that he's doing all of those things. Even if you could just show a 5-year profit loss history, then it would be interesting. But then at that point, I would go and look at it and I would be like, okay, well, but this actually does match, that shows all of the problems that we're talking about. I've come through this before. I really have never had somebody show me 5 years. I've never come across somebody that they've got 5 years. I have had people that show me like 2 years, but then it tends to be one of two cases. One case is it'll look like this, and then there'll be like a big drop, and then they're kind of up, and they're like, "Oh, I'm still profitable," right? That happens. That happens a lot. And then the other one is that it'll be like this, or something like that, and it just happens to end at the right point. So you can look at those and you say over 2 years of data, like that, those probably aren't going to be profitable, or at least not very profitable after 5 years, right? You can show me 11 years. Yeah, I would definitely like to see 11 years. I've never had somebody show me 5 years of profit, let alone 11. What do you think about people who say that the Treasury is not useful to trade and they prefer the ES and NQ? Well, I could understand why somebody might prefer the ES and NQ, but if they say that they aren't useful to trade, they're just dumb. Like, I don't know what else to say about it. Like, man, yeah, they prefer blowing their accounts up faster is probably what that means. Man, the Treasuries can be so valuable. Like, I mean, there's not as much of a floor culture anymore, you know, because everything's electronic trading and everything, but the Treasuries have always been the main star, guys. Like at the CME, the Treasury pits is like one of the biggest things. So while all of the retail traders are coming over here gambling on ES, all of the serious guys, they're trading Treasuries, man. And especially in times of like risk off, like, man, having the Treasury in your back pocket is so valuable. So I think that some of my best periods have been periods where I'm just holding longs in the Treasury, and then you go on Reddit and everybody's just panicking and, oh, I tried this and all these things, and you know, and I just kept losing and losing. Because what happens? What happens is, you know, it'll start out and you get a trend and it'll start doing this, you know? And so it's like, if you got in early, then all you got to do is hold it. And it's the easiest trade in the world, right? And so you try doing that in ES, it's just so wild. It'll stop you out every time. But meanwhile, over in the Treasuries, it's kind of like this. You know, you just easy peasy. And so on those days, I love to just go on Reddit and read all of the posts from the guys that are like, oh, I thought it was a profitable trader and now it doesn't work anymore and all of these things. So, well, I don't know if I can just take so you don't have to get it third party verified, but I am going to look at it and be like, is he faking this? Absolutely will do that, right? And another thing would be, so I've never gone this far, but I have had people where they're like, oh, I have profits or whatever, and then they give you something that like you can't see anything about it, right? It's like, okay, what were all of the individual traits? Like what was your largest winner? What was your largest loser? What's your average win? Like you can't sort any of those things out from it. And then I would have to go in by hand and like generate all of that stuff. But if I was 10 years of data, I'd be willing to go through that, right? Did you show me your NinjaTrader 8 performance screen? I remember that. I think I remember seeing, because I remember very early on going like, oh, okay. Like it seems to me like Uzi is using order flow and everything to get, not incredibly amazing results, but pretty consistent results. And I don't think that it was 5 years, but it was enough for me to be like, like this guy actually does know what he's doing. Yeah. Yeah, it wasn't anything particularly special. Yeah. Well, the thing that I remember the most about you, Uzi, when you came in was that you literally only took one trade a day and it was one tick. And I was like, what, really? But it was working for you. And that really impressed me. I would keep picking at it until you find something that validates your bias. Well, the issue here is this, Till, is that if you give me 10 years, so I have 10 years of trading results that I can do statistics on, right? Like I need to be able to like graph it and things like that, right? Okay. So I have that and it shows profits and there's nothing suspicious in the data right away, right? I'm looking at a Nobel Prize. Right? I'm going to be like, okay, now we're going to figure out how to systematize it. He doesn't think that it can be done, but it can be done, I promise you. If the only piece of information that you're using is a single time price series, we can systematize it. And I'm going to systematize it, and I'm either going to start a fund or I'm going to submit it to a journal, and I'm going to get a Nobel Prize. Because if I can prove that there is a statistical anomaly in the markets that's persistent, results in profits from only using a single time price series, then I have just proven one of the greatest questions in all of trading and economic science. And I would want to profit from it. So, of course, then the next problem would be, okay, if I'm going to submit this to a journal, then I'm going to have all of these things. So then we're going to have to be like, okay, now we do have to go and get it verified. Now we are going to go through all of the effort to get it verified and all of these things, right? here's the conditions for showing it to you, and then you never see it. Like, this is true. It really is. On Reddit, that's always the way that it goes. Is there's two groups of people. There's the people that are genuine and just naive, and there's the people that are lying to you. And the ones that are genuine, they give you the results, and then you show them why their results are not actually what they think that they are. And hopefully they take the advice before they blow up and, run with what they've got. Or the ones that are lying to you, they will either never give it to you, right? Or they'll send you something that you can tell is fake. Like that's the ICT way of doing things, right? So he will just like straight up fake it. You would want to graph it? Okay, so here's I've come across this one before, and that is like such a huge red flag to me. You've been profitable for 11 years and you don't have the tools to be able to graph the profit curve of your trading or to generate strategy, like statistical information off of your trading. I really just can't imagine a person that's been that successful at trading and they don't know how to use tools to do things like that. I just can't imagine it. Because I can come in and show you all of my trading from forever. All the sim trades, all the live trades, all on what instrument it is, and filter it in any which way that we want to do to be able to say, well, when I'm doing this, it works. And when I'm not doing this, it doesn't work. And, I can just have the tools. I can immediately show it to you. If I have all of the transactions made over that 11-year time period, I can make that stuff. It's not that hard. This guy has 3K live. Yeah, you know what? So the other day, and I just kind of stumbled upon it, but the other day I was looking on YouTube, and I was like really flabbergasted by some of the live streams that were there. Like, let me see if I can do it again. I think I was searching for order flow, something like that. And, it just happened to show me one. So then I was like, oh, okay, let's do this. Okay. Well, hey, well, that's because it's me. I don't know if let's do it a different way. Let's do it incognito. Let's do it incognito. Order flow live. Hey, I'm still the first one. Yes. Okay, cool. Because I was coming across, I'm the first one, but I'm not the biggest one. This is the one that I came across. Yes. Order flow stream. So he is just using Bookmap on ES and NQ basically, and he has footprint charts. Like it shows you in the preview what's on his chart. And I'm sitting here like, why does he have so many viewers? What is going on there? Is he cheating? Is he using bots or something? Because go to the channel. Okay. He only has 5,000 subscribers. Okay. He has a certain title. So that's where I was like, oh, hey, let's put order flow in our title, and let's put the instruments that we have up perhaps on there. Maybe that will attract more people. I put DOM on there. I did that yesterday because this is 2 days ago that I noticed this. And actually the viewership on the stream actually did go up a little bit. So it seems like that those little changes to the title helped. Maybe we can change the thumbnail. He's not doing a thumbnail. And maybe people just see that and think that that's cool looking. But how does it get to 413 people watching at any one time? And it's only a 5K channel. There's something weird going on there. I don't know. Now the thing is, there's Top Step. Of course, a lot of people are watching Top Step and Bookmap. Okay, but okay. This guy right here has more people watching his stream where he's showing Bookmap stuff than Bookmap themselves have. How is that possible? So my best theory is that he's cheating. My best theory is that it's bots. That he doesn't actually have 500 people watching. But I the other thing is, there you go. There is like activity. So I don't know. It's crazy. How is this stream like this literally doing the exact same thing that we're doing? They're not, I don't think they're even talking. Have so many people. It's so wild. I don't get it. Are your trades visible on the journal? And you know what? I don't think so, actually. I don't remember how that works. You know what though, man? Like I'm kind of not a fan of the leaderboard, just because the people that are at the top of the leaderboard are always people doing something that you really don't want to actually do. Let's see. I can close this window. How does it work? Tools. Oh no, simulator account. Oh, there's just a little button that says show in leaderboard, except for that I would have to make a new account to put it in the leaderboard. Oh, okay. I haven't looked at their leaderboard in a long time. They're usually one of two categories. One, they trade like a ton, or they don't trade very much. That's daily. We want to go to let's look at monthly, right? So here you have monthly, 356 trades, 63% win rate, right? So he's doing something with a fat tail. He's doing something that wins most of the time, but if he loses, it's like ugly. So like do you see here, his average win-loss is 127, but his maximum win-loss is 1,812. Like, what's going on there? It's on Sim too. There's actually only one person on this list that's not on Sim. That's interesting. I wonder why this guy shows up at the top and not this guy. This guy's results look a lot more interesting to me. Yes, UB, multiple contracts. Tell me I thought it would tell you more than that. Oh, here we go. You know. Yeah, see, like when he loses, it's a lot more. Nobody has kind of equal ones. Wait, how come? Oh, it's only going to show me all. There we go. I'm like, there's got to be more than that, right? Oh, wow. Okay. Oh, wow. Oh, that's really weird. Why is it that all of a sudden he just has this one run to where he just makes an insane amount? It went 45 ticks in favor. He had full size on. I don't know. That's interesting. But like, that's 1 month. That's the other thing. Is like, okay, show me 5 years. I have to say though, these guys could be trading anything. They could be trading news. They could be trading order flow. So they don't really fit my challenge, right? You should expect to see some people in the on the Jigsaw leaderboard that are good traders. But I've never, I used to, I guess the whole thing is I used to look at it a lot to be like, okay, are there some people out there that are like, you know, and maybe we want to try and talk to them and things like that. But like kind of my conclusion was no. It wasn't somebody that lasted for years. In my country, we may say that all prop firms have deleted the treasury from their platform. Can you explain why they did that? Yeah, because the sims that the prop firms are using aren't very accurate in dealing with fills, and so there are ways that you can trade the treasuries to kind of fool the simulator. And there was people getting funded from doing that. So they decided, oh, we're just not going to have the treasuries anymore, which is kind of dumb, but that's what they did. Can you click on calendar? Hold on. Are you talking about this thing? You're seeing on my calendar? Or was there something back when we were on the leaderboard that was like, okay, let's go back to monthly. Let's go back to this guy that we were looking at that had won like an insane amount of money. Was it? That wasn't this guy, was it? No. Well, but that guy has 300 trades, so like we could look at that. Then I don't think if you go click calendar over here, I think it goes back to my calendar, yeah. Then I'd have to select all, and then you'd see that I'm not really trading a whole lot lately. They were both profitable days, though, huh? It's not bad in February. What was it, January? There you go. Yeah, that one day. This one was a mistake. This 14. I like, it should be a loser, but it shouldn't have been that big of a loser. I don't know why. For some reason, it's like, oh, let's size up today, and then that ends up being a loser. But whatever. It was worked out, anyways. And you can go back to like, oh, did I like not trade at all in December? Oh. Okay, November wasn't as good. Tisk, tisk, tisk. Those were all small trades, though, on those ones, so. Those were like, quick little scalp, didn't work out or something like that. I'm looking to go back. I think I have to go back even further than that, like to August, I think. Yeah. And we can see the real trades. But then why not just go to the dashboard, right? Dashboard. And go to 2024. 101. I'll show you all the bad. The good, the bad, and the ugly. No. Let's go even further back. Let's go to... Oh, how far back do I need to go? 2022, I think? Yeah. There you go, yeah. Oh, wait, what's with this one? I don't know what's the deal is with that. No, that's 2023. Oh, maybe it did happen like that. I don't know. But I think that I need to go further back than even that. Yeah. I don't remember. Oh, I remember that now. Okay. That's because that wasn't on the instrument. That's why. Oh, there was like, I took some trades in oil, I think. Oh, there was some in... oh, maybe this was. Yeah. Yeah. See, like what happened was I was trading and I did really good for a while. And then there was this market that I just did not understand and I just did not do very well. So I kind of scaled back on trading from that, but then ever after that, it's been good. This has been like the past year. So I don't remember why this one, I don't know. It's kind of like, it's the only $400 loss there, but kind of, it really makes the chart not look so cool, huh? But that's where then if we come back to 2024 and we just like skip January, because that's the period where it like really sucked. I think that's kind of more indicative of the performance. So it's kind of like, except for that, you just haven't traded very much this year, unfortunately. But we were paying for everything before I came into some things that kind of prevented me from trading as much as I wanted, unfortunately. I think one of the problems is that, like, like I had kids and things like that. Like, I haven't been to where it's like, I really feel like I'm 100%, But there are some periods of my performance that look really good. What are you guys talking about here now? A lot of non-correlated assets that one may be training and another isn't. Why would you trade something that isn't trendy? I don't know. Feels like just talking now, and I'm still kind of like, well, yeah, but you're gonna show me that? Are you gonna message me with the results? Or, I forgot about D was saying I was gonna message. I'll message you somebody that has like a really big like stream. It's Patrick. Fuck that guy. I have zero respect for, like, most of the time I'm like, listen, we don't want to talk about people. I don't want to start battles, and I don't want to spend time talking about people. But I must admit, I fucking hate that guy. He is such a slime ball. He literally he will take a bunch of trades during the day on all these different assets, and then that's what he'll make a video about, right? And he's just outright lying to people. And he's done it several times, and he'll go away and he'll come back and as popular as ever. It's just so infuriating to me. Fuck that guy. But I don't spend a whole lot of time thinking about it. But yeah, it's Patrick. Patrick is the algorithm's favorite one. You don't want to buy his? No. Does he have a course? Wait, I'll go look. I have to do this from an incognito tab again, because I don't want it to, I don't want YouTube to be like, oh, you search for Patrick Whalen, let's start showing him in your feed. No! If he shows up in my feed, I'm going to say, do not show me this again. Is it Patrick Wyland? Did you say it Patrick Wyland? Okay. Let me come into his videos. Yeah, this is the perfect example of like the kind of bullshit that I just despise. Oh, look at how much money I made. Proof, etc. Oh, okay, he did it in Tradeify accounts. That's cool, I guess. Oh, a course for only 200. Well, okay. Listen, I mean, 200, that's, at least it's a good price. At least it's a good price. Why do I hate him? Because he's a proven liar. Like literally what happened was he would go and have multiple accounts and take different, even contradictory positions in different accounts. Or, like during the day, there would be like 5 different big moves. And he would like YOLO on all of them on sim accounts, right? And then the one that does really, really well, he goes and he turns that into a video. And so he was telling all of this people, he was making all of this money. He became really big on YouTube because he was making all of this money. And then people caught him and he admitted it. So, and this has happened like literally 3 or 4 times now where Patrick Wayland has been caught straight up lying about his performance and faking performance on YouTube. So, hey, who knows? Maybe it sounds like he's doing like these accounts and he has some verified stuff and he's doing it live. So like maybe it's different now, but I'm just saying the way that he got to where he is by lying. And I can't believe that anybody takes him seriously. And honestly, I don't think anybody does take him seriously. Like, if you go to the subreddit, his name never comes up. For some reason, his name never comes up. Maybe it's because he's not trading futures as much, but he's just a straight up liar. And he has the thing that pisses me off about it is that he was proven to be a fraud, and that should be the end of your channel, right? It should just be like delete your account, and he's still around. Who trades with the car in your office? Well, somebody that's trying to use the Lambo to promote their stream, obviously. 0% drama. That's why I'm here 3rd time. I know. I really try to avoid talking about these sorts of things. I really do. But sometimes I just can't help it, man. Yeah, there's a sucker born every minute. Well, but I mean, this it's like a bigger problem with society is that people that are frauds, they can continue to make money from the fraud even after being exposed. And even really big ones. Like, you know, I think that the whole thing with was that boxer that had a cryptocurrency and there was that whole fiasco, right? Like they're still sticking around with him. The tech linked guy, he's still around even though he just literally blatantly rug pulled his audience. How can you rug pull? So there's this Squid Game season 2. There's a character in Squid Game season 2 who was a cryptocurrency guy and he promoted this cryptocurrency and then it collapsed. And he's like, well, you know, you took the trade. That's on you. And after it collapsed, because he had already sold and gotten out, he deleted his YouTube channel and disappeared. Right? That's not realistic. That's not what happens. You rug pull your audience and people still watch. What's with that? Why isn't this showing in journal? Well, so 1, I don't have it on the leaderboard, but 2, the things that you were seeing like in January or sorry, this month for February are sim. They are sim. I have not traded live since I lost my day job back in August. Except for like a few small like $5 trades to you know, reduce commissions or to reduce data fees because if you don't trade at all, Rhythmic like charges you more. So, but yeah, no, just pure sim, Ninja Trader sim. So like the fills and everything are very, very accurate. So, you know, if I was taking those, I think part of the reason why I think it would be important to point out that it's sim, because if I was just taking like 1 lots on the micros, then it'd be like, hey, I should have done those live and my performance would be live. But one of the things that I'm doing on the sim account is I am using multiple contracts. And a big part of those results is the way that I kind of manipulate my risk with the multiple contracts. Right? So it might not necessarily be something that you always want to do, right? Yeah. So that's why that's important to note. But the reason that I'm not doing it isn't because like I feel unconfident in my trading or anything like that. It's that I don't have a day job And so the only money that I have to trade is the money that comes from the stream. And, if something were to happen, then if I took a big loss, then I wouldn't have any way to refund it or anything like that. Would just be the end of the stream. So until we get another day job, I'm just not going to take live trades. Man Trading investigates all these fake gurus. Yeah, but he's just doing it so that he can run his own racket. Because he makes all of his money from people using his affiliate link for funded trader programs. Like, affiliate things are great. Again, if you want good creators, good content, good tools, you have to reward people for it. But I have zero respect for people that are hawking these funded trader program affiliate links. Platform, cool. I do it for Platform. I do it for News Squawk. If there was some sort of news subscription that there was an affiliate thing for, maybe I would do that. Individual products, computer stuff, sure, fine. But prop firms, no. Funded trader programs, no. I think that you're harming your audience by doing that. I have zero respect for them if that's how they're making their money. And that is, most of the people that are on YouTube have YouTube channels that are like making good money. They're making good money from that. So that's why I say Man is running his own racket. Oh, I'm sitting here listening to you complain about people being frauds and how you have... No, I didn't say that I have years of profitable trades. No. So I have 2 years of results that were pretty good. That there was one period where I kind of struggled a little bit, but then since then it's been okay. And like my standard is 5 years, right? So do I have 5 years of profits? No, I don't. Listen to what I say. You assume things because everybody else says that, and so you think that I must be saying that. I must be saying, oh, I'm so profitable, you should follow me because I've made tons of money from it. No. Listen to what I'm saying. What we know based on the empirically proven behaviors of the markets kind of suggest that while there is informational edge around there lying everywhere for you, it's really, really hard to take advantage of that informational edge because the market is so inefficient. So it's possible for a retail trader to be profitable, but it's a really, really difficult road. And the results that you're going to get from that aren't really all that amazing. So if you're trying to make a living from it, or you're going to become a millionaire from it or whatever, don't do it. It's not going to happen. And I'm telling you, I can give you all of this proven information, things that all of these other, people that most retail traders don't understand, really advanced information, and it's still going to be hard. And I make absolutely zero claims about my performance. I will show you the results and we can filter it any way that we want. But I'm not saying watch my channel because I'm a proven profitable trader, and if you watch it, maybe you'll be a proven profitable trader yourself. No, that's not how it works. Watch my channel because I give you empirically proven information that nobody else will give you. How do you trade these days? Context? Well, so, we did have some news at the beginning of the day, but I was kind of like not that moved by it. So I think that on a day like today that you just kind of wait for non-farms tomorrow, right? You're in no position to trash that. Now I take great offense to that. I'll tell you why, RT416, because I'm not lying to people. I'm not, okay? I am 100%. I'm showing you everything. I'm all of the information that I'm giving you. I'm showing you where it's coming from. I'm proving it. I'm not going up on YouTube and saying I made $100,000 live when it was actually sim. I'm not going onto YouTube and taking a bunch of different trades and then selecting the one that worked and trying to lead people to some impression of, okay? The reason that pisses me off that Patrick Wayland is so well on YouTube is that he's a proven fraud. It's not just a proven fraud, he's an admitted fraud. He said, okay, you guys are right, I was lying to you, and then he disappeared for like 6 months and then came back like nothing changed. So again, I'm like gone way over. but I want to go back to a rant that I had earlier. Do you guys want good content? Do you want good tools? Do you want information that can potentially help you become a better trader? I'm telling you, there's a real limit on how successful you can be with day trading. It's just no matter what, okay? But you want to do it anyways. You want to be the best at this that you can possibly be. And you're going to need some help getting there. Okay. Then this attitude that is like, I'm going to bust anybody's balls unless they have somehow met my standard of a profitable trader and have proven it to me and everything, then you are actively preventing yourself from getting that content. Why would anybody get on here every day and put up with that kind of bullshit? Put all of that work in, and then they're like, well, but Patrick Wayland, he showed $100,000 and you didn't. And fuck that, dude. Nobody's going to want to make content for you in that situation. Are you like, do you want me to just quit and stop making content? Is that what do you think I should do? Do you think that I should just quit, huh? That's what it sounds like you're saying. What? No. What am I talking shit about? I'm talking shit about people who commit fraud. Do you understand? I'm calling people out for fraud. Are you accusing me of fraud? Because I have been 100% way overly honest about literally everything on this channel. I've never lied to you about anything. Okay? And the people I'm trash talking are frauds. Thank you, Ismail. Like the people that watch, they know, right? Seth is 100% authentic with everything he says. Most other people are trying to sell you. Well, listen, I'm not saying that. I'm not trying to sell you stuff. Like, I would really love for you to go and use my affiliate link for Jigsaw in the video description. I would really like for you to go and buy my indicator package. I think that it's a really great product. Okay, so it's not like I'm not trying to sell you something. Okay, but I'm not lying to you. I'm not committing fraud or anything like that. And I do, and another thing I got to point out is that I do trade live. I'm just not while I'm unemployed. That's all. Maybe next week we'll get a new day job, and then we'll be back to live trading next week. Don't use Wiggle, but it is what. Did you not listen to how it was? What it was doing? So I will get frustrated when it's like, okay, because I do a lot of work to say, okay, for instance, I teach you empirical information, right? And so yeah, most YouTube channels aren't giving you empirical information, and so anybody that's been watching other trading channels and then they're going to come to my channel, they're not going to understand that. And it's really frustrating when they try and bust your balls over something and when they just don't understand the channel to begin with, right? But that's okay. but when there are things that like I've explained and then people still say things that are like, I don't, you know, like the wiggly lines are order flow. What's my education background? I have a bachelor's in computer science that I worked for a large US bank for 6 years. And then I worked for an insurance exchange for 6 years, was it? 8 years. And then I worked for not 8 years. And anyways, I think it's 6 years. And then for the last job for 1 year. Sure, that isn't the chart no more than a graphical depiction of the order flow. How can it not be? Whatever tools use one to decipher the orders is user preference. Sure. I mean, really, like, it's what is the definition of order flow, right? So I saw this one guy and he said, like, oh, footprints aren't order flow. Well, okay. I think that they're just trying to turn into like a set, like, it really bothers me for somebody to say that I'm a fraud, because that's not true. A fraud would be somebody that says one thing and then the other thing is true. That they say something that's false, and I don't do that. Really, RT416, really what it is that you're just disappointed that my past performance doesn't match up to the standards that you were hoping to see. And what I'm trying to tell you is you probably will never see that. And if you do see somebody that shows you that, they're probably pulling you. They're probably pulling your leg. They're probably deceiving you. Or they're a degenerate gambler. That's the other part of it. Maybe they're a degenerate gambler. I like Seth Orderflow, but I can't use it. I know, right? If they ever give us custom indicators, then we'll definitely like convert it over to there. But doesn't meet the standards of someone. Yeah, then don't trade, dude. I don't know what to tell you. Oh yeah, dude, Sportsbook chat. I saw that, but I didn't see the. Okay, let's do that before I go. I was really funny. I was really surprised that you found the Patreon, because we kind of have like run that one down. Like, we want people to subscribe to the $3 Discord. Health, wellness. You're gonna need to rephrase your question because I don't understand what you're saying at all. How do I do this? Oh, maybe it was. I can go here and I can say, yeah, here we are. No, that's not it. I don't see how you're attaching it, Chad. Or is there a link in there or something? Is there supposed to be an attachment? I just don't see the... What the big lost in your career and how you basked that. I don't know what the... Sorry, I'm being a little ADHD. So I saw one person that they were saying only the DOM is order flow. So I don't know like what definition of order flow people have for that, but I define order flow as the data. So if you're doing data and you're utilizing it's informed by market depth, then it's order flow is my definition. So I made a video and there's like this hair that I could see on the video, and I'm looking at my screen right now and I can see it, and I'm like, oh, because I was like looking in the mirror yesterday and I couldn't see. Well, it's just kind of weird how when it's zoomed out it just stands out. Maybe I just need to cut those hairs off though. I think maybe you were asking like, why do I not have a day job right now? And the basic gist of it is that it was in an industry that's really struggling right now. So but we shouldn't get into that story again. Man, I don't know. Chat, I saw your message. I didn't see anything in it that was like a script. So what you should do is find me on Discord, join the free Discord, and then just message me. Make sure that you have your settings set to that you know, anybody can message you, so that you don't have to add me as friends to send me a message. Send me a message, and then you can attach the files in Discord, and that's the best way to do it. Do you use a volume profile or a market profile? Not really. I mean, I have it on there, and there are some things in volume profile, but this is another one of those, well, if I'm right, I expect to see the volume profile to look like this. So I don't use it for entry signals or anything like that. How did you overcome a huge loss? I don't know. I mean, you lose, you just keep going. So, if you want to talk about, what was that? I think that might have just been endogenous, because I'm not hearing anything on my new squawk. But that was like, they stopped out there, man. Wowzer. Yeah, it just like blasted through the lows. That's crazy. Eek. So I think that the time that I had to deal with loss, like really deal with it, was the divorce, right? And that was all sorts of reading books and learning a bunch of different things. Why don't you keep overnight session? It's just because I don't care. Honestly, on my volume profile, it resets at the beginning of the session and it doesn't have the overnight's volume. That's correct. And why? Because I don't care. Like, people ask me this all the time. Yeah. It's like, I'm using volume profile, I'm using footprint. Should I use regular session or extended session? I don't know. Like, I've never seen any piece of information that suggests that you should use one or the other. I've never seen any good reason that one matters. We would have to have some sort of piece of data to show it. I'm honestly, so on one side, okay, maybe it's a little disruptive if I'm like feel like I'm defending myself and things like that. But the other hand, I wish that RT416 didn't go because that's good content. Like, come on. I hope that there was a lot of things that you guys learned from that, right? Like, I think that I've had some performance over the past 2 years that I'm really proud of, actually. It's just like, you're not going to become a millionaire from it. No. I basically cover my costs and that's it. And as long as I get to keep trading, I'm happy. And maybe in a couple of months, I will be able to build up enough where I could take bigger risks, right? So actually, I did some work on this next video that you're going to see, and some of the things that he did there kind of said to me, oh, you know what? I should save up for a bigger account. So I think we're going to do that. And, I keep trading micros here, but micro treasury yield futures, that is. That's the whole thing. When I switched over to the micro treasury yield futures, I started doing really, really well. So. You didn't attach it, could have copy and paste. Oh, I don't think that it pasted, dude. Yeah, so do it on Discord. All right, guys. Let's see, is there anything else? No, I think we're okay. All right, guys. I gotta get going. I will see you tomorrow. Stay excited.